Greetings everyone. Today's discussion is going to be about items of income that may be excluded from gross income. That means you're receiving this, but you may not have to worry about the tax consequences. There are quite a few of those, and I cover some of the main types just in case you end up having one or more of those types of income. This way you do not unnecessarily pay taxes on these types of income. Okay, so let's walk through these. The first item category that I would like to present to you is the alimony. The second one will be child support payments. Now, if you're receiving alimony and your divorce was finalized after 2018, or you're receiving child support payments, guess what? No consequences for tax. That means divorce has to be finalized. Let's put aside the child support payments, because child support payments received are never included in income anyway. The party that pays the child support, in essence, still has to. They got to take care of the kid, right? Now, the spouse that is receiving the child support payments will not include that in income. The spouse that's receiving alimony, now that's another story. We have to ask ourselves, when was the final, divorce finalized? When was the final deal done? When was it complete? The contract is signed when people are married, and then there is paperwork when people are divorcing. Of course, it takes longer, and I'm not going to talk about divorce law. That's not my specialty. But one thing is important to know: when was the divorce finalized? In order for you to determine if the alimony income received is taxable, would it become part of the gross income? Now I'm going to take you back again. Remember, do alimony for divorces after 2018. That means 2019, 2020, and now we are in 2022. Any divorces that happen now and alimony has to be paid, guess what? If you're the receiver, that is not an income for you. Or if you know anybody else that happens to receive that, not considered as income. It's excluded. Very important to remember. Now, what comes next? Gifts and inheritances. Now, this is a topic that many folks are very, very interested about. They always question me, well, how about if I receive a gift from an unknown party? What if I receive a gift of $1 million? Well, good for you. Congratulations. Any gift in any form for any amount that you receive is free of taxes. It doesn't end up in a gross income. It is excluded. Okay, so it could be your family giving you gifts. It could be a random stranger. It could be in a form of cash. It could be in a form of a property, buildings, equipment, cryptocurrencies, stocks, bonds, refrigerators, you name it. You got a gift, it's not considered as part of the income. So you entirely exclude it. Can you imagine that? If everybody in the world gave you just $1, you'd be a billionaire instantly, right? So that's one. What's the deal with inheritances? Well, that's also a gift, except the gift that you receive is from a person that's alive. Inheritance is an amount that you receive upon the person's passing. Say you have a great-great-great-grandpa who passed away, and you happen to inherit some of the assets that the great-great-great-grandpa had. Would that be considered as gross income for you? No, that's excluded. It's treated the same way as a gift. So whether the gift is received upon the person's life, who's giving it, or upon their passing, not a problem for the recipient. So you're in luck. If you receive any gifts or inheritances, congratulations. At least for federal tax purposes, you don't have to worry about. How would your state treat that? Well, depends on what state you live in. Okay? So consult your tax professional, if you will. Well, what's my next topic that I want to talk about? All this compensation that an individual may receive maybe as a result of accident insurance proceeds, as a result of an accident, or damages for personal injury or sickness, or workers' compensation benefits. As you can see, all these items are type of income you receive or a person receives upon some kind of an unlikely event. An accident happens, or workers' comp case happens, you get injured at work. Nobody wants to receive this type of income, believe me. Everybody wants to produce phenomenally at work and have a good time doing so. Nobody wants to get hurt in the process, but in an event that happens, what are the consequences? Well, and why is it that these types of income are excluded? Well, let me refresh the list again for you. Accident insurance proceeds, damages for personal injury, workers' comp. You see, in a case like this, if you're receiving any of these types of compensation, you are not really better off. In essence, they're paying you for pain and suffering, so to speak. They're paying you to make you whole as much as possible. If you get injured, they're paying for those injuries. Now, would you go back to your previous self? Maybe, maybe not, it all depends. Hopefully none of you will have to deal with this, but in the event you receive any of these types of compensation, keep in mind that must be excluded from the gross income. Do not pay unnecessary taxes, please. Let's go over the next group, if you will. What's coming up next is Social Security benefits, and you can see it says to a limited extent, and welfare payments. Now, Social Security benefits, of course, you receive generally once you reach a certain age, and those benefits generally themselves are not part of the gross income, so you don't even have to worry about tax consequences. The reason I said to some extent is because if you receive Social Security benefits and some other type of income, maybe rental, maybe also still work, then maybe some of that Social Security income could be considered as a taxable income. It may end up in a gross income list, as I covered previously. But otherwise, on its own, Social Security income is excluded from gross income. You do not have to worry about it, no matter how much you receive. Obviously, it's not a significant amount to start with anyway, but regardless, Social Security income, Social Security benefits that you receive on their own are excluded. Now, the next item I spoke about was welfare benefits. Welfare, general relief, etc. These are type of compensation the government provides to individuals and families who are just starting, I guess, to put together their finances, or they're having a tough time finding jobs and they're having financial difficulties. So at least to keep their lifestyle going until something works out for them, they receive some welfare benefits. Are welfare benefits considered as part of gross income? No, they are not. Think of it, I hate to call it a gift because it's not really a gift, but generally a similar compensation where you don't really have to work for it, but probably will have to look for work. That's another story. But either case, if you receive welfare benefits, or you know anybody that does, or general relief, or any other compensation from the government to get yourself on your feet and, you know, join the workforce, those types of income are excluded from the gross income. Do not include that. Do not report that as a taxable income. What's coming up next is meals and lodging if furnished for employer's convenience. I know it's a handful, isn't it? And then scholarship grants to a limited extent. So two separate items. Let me talk about each of them. First, meals and lodging if furnished for employer's convenience. Now, this is very unique, one-of-a-kind thing. Let's say you work for an employer, let's say a hotel, and the employer says, you know, as part of the requirement of the work, you have to stay at our facility. So we will provide you the lodging, the place to live. We'll give you the meals, but you have to stay in the hotel. We'll give you the manager's suite. You live here and you work here. And why would they do that? It's because, you know, they may need your services at a random hour in the middle of the night. So rather than, you know, waking you up from your home to get back to a hotel or motel or any other, I guess, rental facilities where they need you to be there, it's better to give you the place to live and to give you the, I guess, the meals and lodging, and have somebody available at all times. Now, this is done for the benefit of the employer, so it's part of the job requirement. So if it's part of the requirement for you to be there and you're receiving this type of compensation, again, keep in mind, free lodging is not money, but it has value. Meals are not money, but they have value. So it's a form of compensation. If it's a requirement for you to be accepting that job, and as a result of it, you have to stay at the employer's provided facility, then that type of compensation excluded. So do not include it as part of your income. Now, the next item in that list was scholarship grants to a limited extent. Again, guys, limited extent, that means generally they are not included as income. If you receive scholarship and grants, there are instances, there are circumstances based on the amount that you receive in comparison to I guess, educational expenses that you're having. Some of the scholarships and grants may become part of your taxable income. Again, more on that in a future presentation, but generally speaking, to some extent, scholarships and grants are excluded from income. Well, folks, let me take you to the last of the slides, which is interest from state and local government, aka municipal bonds, and life insurance paid upon death. Now, municipal bonds, these are basically bonds that local, state government will issue because they try to raise some money, and rather than increasing the taxes, they'll issue some bonds. They're basically selling you some bonds and you buy those bonds. Those are for long term and they pay you interest, just like you would give money to the bank or put it in a CD, certificate of deposit. Well, is that interest income gross income for you. If you remember, when we discussed the items that go into gross income, interest income was part of that. But if the interest income is received from a municipal bond, it is not taxable, at least for the federal purposes. So you can exclude that. And finally, the last item, which is life insurance paid upon death. I do get this occasionally. Guess what? Not taxable. Generally speaking, any insurance proceeds received upon death, they are not taxable. I don't want to call that a gift, but it's basically painful enough to lose somebody near and dear, and then typically the compensation that the person gets from the insurance company is to cover the earning capacity of the person who passed away. So for that reason, death benefits received by the beneficiaries are not included as part of the income. So it's excluded. Well, folks, I do hope this list helped you clarify to some degree your knowledge or enhance your knowledge in tax matters, at least some basic knowledge. Please feel free to connect with us again. I'll be covering many more topics, everything and anything tax related. Until then, I hope to see you soon. Take care of yourself. Bye for now.